morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone, and October 30th. Hope you guys got some great upcoming plans for Halloween tomorrow. Hope you guys have a safe and festive time. We do got a lot of data today, and let's go over it. We got the first one we'll start with is the Q3 employment cost. Previous quarter was up 0.5%. Forecast is keeping that trend at 0.5%, and it came in at 0.5% in Q3. So this is something to watch because obviously this is inflationary data. So if costs of employment go up, obviously inflation technically goes up. Let's jump over to personal income for the month of September. So back in August, it dropped 2.7%. However, forecast was calling for an increase in September at 0.4% and exceeded that to 0.9%. So good overall jump after having a bit of a drop in August. And then we also got the counterproductive one, the consumer spending for the month of September. August, it went up 1%. Forecast is calling for that same trend at 1% and actually exceed that at 1.4% month over month. So people are making more money, but they spent even more than what they're potentially making as well, percentage-wise. We got the PCE, personal consumption expenditure. We will start off with the month over month. And back in August, it was up 0.3%. Forecast, and there's no forecast, but it just came in at 0.2%. Year over year remained unchanged at 1.4%. Now, when you take out the big ticket items like food and energy, we get what they call the core PCE. This is the Fed's favorite gauge for looking at inflation. If you recall, about 2 months ago, back they basically stated that they were going to keep to an average of 2.5%. So, with that in mind, month over month, we were back in August at 0.3%. Forecast come for 0.2%, came in right at forecast at 0.2%. So it's year over year dropped from 1.6% down to 1.5%. So we're well off our target rate of, technically they want to be about 2%, but they're looking for a spike to average because we've been well under 2% for quite some time. So now they want to go above that to average about 2.5%. So we're well off that still right now. Now we got manufacturing in the Chicago region with the Chicago PMI. We had a 62.4 back in September. Forecast is calling for a dip to 58, and it did drop a little bit down to 61.1. This is anything above 50 is considered expansion, so this is still a good number here. We're still seeing some good numbers out of Chicago for manufacturing. Last but not least, we got consumer sentiment. Our initial reading came in at 81.2. Forecast supposed to remain the same. However, it did get a slight bump to 81.8 at the end here. So the final reading for October is 81.8. Let's jump over to the headline news here. Stocks are down. It's taking it mostly it's taking it from corporate earnings. We had from that, but also we got a couple other things that come up. We'll touch on that. The FANG, most of those guys came in, as what we've been seeing since March. Really, is Nasdaq and the high tech stocks are taking off. So Amazon, all those guys are basically increased. Revenues are up. But we are also getting closer to the elections. So, and according to the polls, it's getting a little bit more narrow. So the concern is possible a contested relationship, which could be leaving this for several weeks as the matters get resolved. So this is what the investors, anytime there's uncertainty, the investors don't necessarily like that. So if that could lead to some uncertainty, that could create some issues later on as well. Let's jump over see how this is playing out in the bond market. And right now we are at unchanged levels from where we left off yesterday, but yesterday we did drop a bit further, even breaking down below the 50-day moving average. This led to a lot of investors to change into worse pricing yesterday. So we did have a change in pricing yesterday, later in the day, for worse pricing. As you saw, we dropped below that and continued with that little wick, but did pull back. Now we did start a little higher, closer to the 50-day moving average, but since we pulled, and right now it's saying we're unchanged from where we left off yesterday. So based on, if you look at from yesterday morning, our pricing is worse. If you look at where we closed, pricing is about the same as where we left off yesterday. Yields are higher, as you can see here. It did break above that technical level. It start off right about the same level, and then rose. We're up to about 0.86 now. We're getting to almost the highs we saw previously last week. before it declined, and we'll have to kind of wait and see how this plays out. But in tech, but in speaking, it's kind of in this range now. This level here is not as strong. It's breaking right through both ways here, so it's not as strong as what we saw a couple weeks ago. All right. So again, mortgage rates, if you look at from yesterday morning, it is a little worse. If you look at where we left off at closing, it remained unchanged as a lot of investors priced for the worst yesterday. So they've already put that pricing in late in the day yesterday. All right. So if you guys are in the market looking to refinance or purchase, stay tuned. I'll leave a link in the end of this video as well as in the description. You can stop by there if you want to look at, get information in regards to any loan programs or got any questions about the process. We're here to help. I am a loan officer and I work with a national lender. So just go ahead and click on that. If you got if we did not answer any of your questions, please feel free to reach out to me. My contact information will be on there. So you're welcome to contact me directly and we can discuss how we can assist you. We can help you with the pre-approvals and financing of your purchases. We can help you with the refinancing needs you have. If you got some scenarios that you need to run by, we can certainly work with you on that. We've come up with strategies for people going through divorces. We've come through strategies working for people who are trying to plan college planning for the kids by using the mortgage. We've come up with programs for financial freedom or retirement for those who are looking to plan by utilizing their mortgage as a conduit. So again, please feel free to reach out and let's talk about how we can help you guys out. You guys have a great rest of your day. Enjoy your weekend and have a good, safe Halloween. And we'll see you on Monday's video. Take care. Bye-bye.